Chapter 2, Navigating the Spectrum, Types of Commercial Real Estate Funds. Welcome to Chapter 2 of our journey with Crestview Capital Holdings, where we delve into the intricate world of commercial real estate funds. As you stand at the threshold of this chapter, you're embarking on a voyage that will empower you to understand and harness the diversity of fund types, each a brushstroke on the canvas of your investment strategy. Commercial real estate funds are the vehicles that shape your approach to investing in the vast landscape of properties and projects. Within this realm, a variety of fund types exist, each offering unique opportunities, risk profiles, and potential returns. This chapter is designed to be your compass as you navigate through the spectrum of these fund types, enabling you to make informed decisions that align with the vision of Crestview Capital Holdings. In the following pages, we'll embark on an exploration of the different types of commercial real estate funds, each presenting a distinct path to investment success. From core funds that offer stability to opportunistic funds that embrace calculated risks, you'll uncover the full range of possibilities at your disposal. Moreover, we'll delve into the nuances of single-asset and multi-asset funds, public and private funds, and the dichotomy of equity funds and debt funds. As you journey through this chapter, remember that your ability to understand and strategically deploy different fund types is the key to crafting an investment portfolio that resonates with your expertise and the aspirations of your investors. By the time you reach the end of this chapter, you'll have the knowledge and insights needed to make impactful decisions that shape the narrative of Crestview Capital Holdings' success story. So, without further ado, let's dive into the world of commercial real estate funds, exploring their features, benefits, and considerations. As you progress through the pages ahead, allow the diversity of fund types to inspire your approach, creating a portfolio that not only delivers value but also reflects the core principles and ambitions of Crestview Capital Holdings. Chapter 2, Embracing Diversity. What to expect in types of commercial real estate funds. In the realm of commercial real estate, understanding the various types of investment funds is akin to learning the colors on an artist's palette. As you embark on Chapter 2 of our journey with Crestview Capital Holdings, you're about to delve into a comprehensive exploration of the diverse fund types that form the core of your investment strategy. In this chapter, you will uncover the intricacies of different commercial real estate fund types, gaining insights into their unique characteristics, advantages, and potential considerations. By the end of this chapter, you'll be equipped with the knowledge to make strategic decisions that align with the vision and objectives of Crestview Capital Holdings. Here's a glimpse of what you will learn in this chapter. 1. Core, Core Plus, Value Add, and Opportunistic Funds. Discover the spectrum of investment strategies, from stable core funds to high-risk opportunistic funds. Understand the risk and return profiles of each fund type and how they align with different market conditions. 2. Single asset versus multi-asset funds. Explore the advantages and considerations of offering single-asset and multi-asset fund options. Learn how to tailor investment experiences to different investor preferences and risk appetites. 3. Public versus private funds. Delve into the dynamics of public and private funds, each offering unique levels of accessibility and exclusivity. Understand how to strike a balance between broader investor reach and maintaining exclusivity. 4. Equity funds versus debt funds. Uncover the nuances of equity funds and debt funds, each offering distinct approaches to investment. Gain insights into the potential for shared ownership and property appreciation versus stable fixed income. As you immerse yourself in these topics, you'll acquire a comprehensive understanding of the various shades of commercial real estate funds. This knowledge will empower you to design a diversified fund portfolio that resonates with the aspirations of Crestview Capital Holdings and its investors. Get ready to broaden your horizons and embrace the richness of investment possibilities that these fund types offer. Your journey through this chapter will equip you with the tools needed to make informed decisions that will shape the trajectory of Crestview Capital Holdings' success story. In the realm of commercial real estate investment, understanding the different types of funds is akin to comprehending the colors on an artist's palette, each shade representing a unique approach to capitalizing on real estate opportunities. This chapter delves into the intricacies of various commercial real estate fund types, ranging from the steadfast core funds to the high-risk, high-reward opportunistic funds. As you explore this spectrum, you will gain a deeper appreciation for the strategic nuances that shape the world of real estate investment. Core funds. Stability and steadfastness. Core funds represent the bedrock of commercial real estate investment. These funds focus on stable, income-generating property assets typically with a history of consistent cash flows and minimal risk. Investors in core funds seek modest returns, often prioritizing capital preservation over aggressive growth. These investments, while offering lower yields, provide a haven of stability amidst the tumultuous waters of market fluctuations. Core Plus funds. The balance of yield and stability. Core Plus funds strike a delicate equilibrium between income and potential appreciation. These funds invest in properties with a solid foundation of cash flow, much like core funds, but also identify opportunities to enhance value through strategic improvements or operational optimizations. Investors in Core Plus funds aim for a balance between income generation and moderate capital appreciation. Value-add funds, unearthing hidden potential. Value-add funds embark on a journey of transformation. These investments center around properties that have untapped potential for value enhancement. The fund strategy revolves around strategic renovations, repositioning, or operational improvements that can unlock higher rents or increased occupancy. Investors in value-add funds are willing to navigate a higher level of risk in exchange for the potential for greater returns. Opportunistic funds, chasing higher rewards. At the pinnacle of risk and reward, opportunistic funds embrace the spirit of adventure. These funds focus on high potential, high volatility properties that often require significant restructuring, redevelopment, or market repositioning. The goal is to seize opportunities in a dynamic market, with the potential for substantial returns. Investors in opportunistic funds are prepared to weather the storm in pursuit of exceptional gains. Crafting your palette of investment. Each type of commercial real estate fund presents a distinct palette of investment possibilities, catering to different risk appetites and return expectations. Your choice of fund type will be guided by factors such as your risk tolerance, investment horizon, and strategic objectives. As you continue your journey to secure investors for Crestview Capital Holdings, a comprehensive understanding of these fund types will not only showcase your expertise but also help align your offerings with the aspirations of potential investors. In the subsequent chapters, we will delve further into the strategies, considerations, and nuances that define each fund type. By mastering this spectrum, you'll be better equipped to shape the destiny of Crestview Capital Holdings, drawing from a diverse array of investment strategies to create a portfolio that resonates with both your vision and the ambitions of your investors. As the chapter unfolds, keep in mind that the choice of fund type is not a one-size-fits-all proposition. It's a canvas upon which you'll paint the future of your CRE fund, a canvas that Crestview Capital Holdings will color with the strokes of your expertise and the aspirations of your investors. Chapter 2, Types of Commercial Real Estate Funds, a kaleidoscope of investment possibilities. In the vibrant landscape of commercial real estate investment, the spectrum of fund types unfurls like a tapestry of diverse opportunities. This chapter invites you to immerse yourself in the world of Core Plus, Value-add, and opportunistic funds, where each category represents a distinct investment approach. Let's explore these fund types through relevant examples that showcase their essence and strategic orientation. 1. Core funds, stability and reliability. Imagine investing in a portfolio of well-established office buildings in prime locations across a bustling metropolis. These properties boast a history of stable occupancy rates and reliable rental income. Your investment focuses on capital preservation and steady returns, appealing to risk-averse investors seeking a secure haven for their capital. Core funds excel in offering stability in an ever-fluctuating market, providing investors with consistent cash flow while minimizing exposure to market volatility. 2. Core Plus funds, seeking incremental growth. Consider a scenario where you invest in a portfolio of residential complexes. These properties are already generating dependable rental income, but you identify opportunities for moderate improvements, perhaps renovating common areas or upgrading amenities. Your goal is to enhance the property's value while maintaining a focus on consistent cash flow. Core Plus funds strike a balance between stability and growth, appealing to investors who are willing to embrace a slight increase in risk for the potential of higher returns. 3. Value-add funds, uncovering hidden gems. Picture yourself acquiring an older commercial property in a gentrifying neighborhood. Through strategic renovations and repositioning, you aim to transform the property into a vibrant mixed-use space that attracts new tenants and commands higher rents. Value-add funds thrive on identifying properties with untapped potential, offering investors the promise of increased returns as the property's value is enhanced. This fund type requires active management and a willingness to navigate a higher level of risk in pursuit of substantial rewards. 4. Opportunistic funds, embracing the adventurous path. Envision investing in a development project for a waterfront resort that's currently underutilized and overlooked. With careful planning, you aim to transform it into a luxury destination, capitalizing on the property's unique location and latent potential. Opportunistic funds are characterized by their high risk, high reward nature, attracting investors who are willing to embark on ventures with substantial uncertainty but the possibility of exceptional returns. The art of alignment. Each fund type represents a unique brushstroke in your palette of investment possibilities. By understanding the nuances of Core Plus, Value-add, and opportunistic funds, you can craft a portfolio that aligns with the preferences and goals of your investors. Your ability to match these fund types with your investors' risk tolerance, investment horizons, and aspirations will play a pivotal role in the success of Crestview Capital Holdings. As you navigate this chapter, remember that the examples presented are illustrative and hypothetical. The true artistry lies in your capacity to leverage these fund types to create a symphony of investment strategies that resonate with the essence of your CRE fund and the dreams of your investors. Chapter 2, Types of commercial real estate funds. Translating knowledge into action. In the realm of commercial real estate investment, knowledge is the compass that guides your journey towards success. As you delve into the world of core plus, value add, and opportunistic funds, it's not enough to simply understand their definition, so you must harness this understanding and transform it into actionable strategies that align with your vision for Crestview Capital Holdings. Here are some actionable insights to consider. 1. Core funds. Stability and prudence. Actionable advice. If your vision for Crestview Capital Holdings leans towards offering investors a haven of stability, consider structuring a core fund. Focus on properties with a history of reliable cash flows and minimal risk. Engage with investors who prioritize capital preservation and steady income. Emphasize your meticulous approach to risk management and your commitment to delivering consistent returns. 2. Core plus funds. Balancing yield and growth. Actionable advice. If you see potential in enhancing properties without straying too far from the realm of stability, explore core plus funds. Identify properties with untapped potential for improvement or growth. Develop a strategy that outlines how you plan to optimize property performance while maintaining a focus on generating reliable income. Attract investors who seek a balance between incremental growth and moderate risk. 3. Value add funds. Transforming potential into profit. Actionable advice. If your vision resonates with transformation and innovation, consider establishing a value-add fund. Craft a strategy that identifies properties with hidden potential for improvement. Showcase your expertise in strategic renovations, repositioning, and unlocking value. Appeal to investors who are comfortable with a higher level of risk in exchange for the promise of substantial returns. 4. Opportunistic funds. Courageously pursuing rewards. Actionable advice. If you're driven by the pursuit of exceptional gains and are willing to navigate uncharted waters, delve into the realm of opportunistic funds. Create a strategy that focuses on high-potential properties that require significant restructuring or redevelopment. Highlight your willingness to embrace calculated risks and your capacity to navigate uncertainties. Attract investors who are adventurous and seek substantial rewards. Alignment is the key. Remember that the choice of fund type should align with both your expertise and the aspirations of your investors. As you navigate the nuanced landscape of commercial real estate funds, ensure that your approach remains consistent with Crestview Capital Holdings' overarching goals and values. Tailor your communication, presentation, and investment strategy to resonate with the unique characteristics of each fund type. Diversity in your portfolio. Consider incorporating a mix of fund types in your portfolio to cater to a broader range of investors. Diversification not only mitigates risk but also showcases your versatility as a fund manager. Offering a menu of options allows you to appeal to investors with varying risk appetites and investment objectives, contributing to the growth and success of Crestview Capital Holdings. From knowledge to action. As you move forward, embrace the actionable insights gleaned from this chapter. Remember that it's not only about understanding the fund types, but also about leveraging this understanding to craft investment strategies that align with your vision. The decisions you make today will influence the narrative of Crestview Capital Holdings, shaping a story of success built on strategic acumen and informed action. Each action you take is a brushstroke on the canvas of your CRE fund's journey, a journey that you are orchestrating with expertise, foresight, and the dedication to turn aspirations into accomplishments. Exploring the landscape, single asset versus multi-asset funds. In the realm of commercial real estate funds, the choice between single asset and multi-asset funds is akin to selecting the right instrument for a symphony. Each option plays a unique role in your investment strategy, offering distinct benefits and considerations. This chapter sheds light on the nuances of both fund structures, allowing you to make informed decisions as you navigate the orchestration of Crestview Capital Holdings. Single asset funds. Focused precision. Definition. Single asset funds, as the name suggests, are dedicated to investing in a single property. The fund's success is tightly intertwined with the performance of the specific asset. Benefits. A-sense focus. Single asset funds allow for undivided attention on a specific property. This laser focus can result in meticulous property management and optimization. A-sense transparency. Investors have clear visibility into the performance of the single asset, fostering transparency and accountability. A-sense customization. Tailoring the investment strategy to the unique attributes of the property can result in specialized value creation. Considerations. A-sense risk concentration. The success of the fund hinges solely on the performance of one asset. Any setbacks can significantly impact investor returns. A-sense diversification. Investors seeking portfolio diversification may find single asset funds limiting in terms of spreading risk across multiple properties. Multi-asset funds. Diversified symphony. Definition. Multi-asset funds pool investor capital to invest in a diversified portfolio of properties, offering exposure to multiple assets within a single fund structure. Benefits. A-sense diversification. Multi-asset funds spread risk across a variety of properties, reducing the impact of underperformance of any single asset. I-sense stability. The performance of the fund is influenced by the collective performance of multiple properties, mitigating the impact of individual asset fluctuations. Since appealing to different investors, investors seeking diversification, but not committed to a single property, often find multi-asset funds more attractive. Considerations: since complexity, managing a diversified portfolio requires comprehensive property management and monitoring, potentially increasing operational complexity. Since performance variability, the performance of individual properties within the fund may vary, impacting the overall returns for investors. Striking the right chord for Crestview Capital Holdings, the choice between single-asset and multi-asset funds hinges on your investment strategy, risk appetite, and the preferences of your investors. Single-asset funds offer focused precision, allowing you to maximize the potential of specific properties. On the other hand, multi-asset funds provide a diversified symphony that can mitigate risk and cater to a broader range of investors. Harmonizing your choices. As you chart the course for Crestview Capital Holdings, consider the melody you wish to create in the realm of commercial real estate investment. Do you envision the precision of a solo performance with single-asset funds, or the rich harmonies of a diversified portfolio with multi-asset funds? Your choice will define the narrative of your CRE fund and the symphony of returns you orchestrate for your investors. Remember, each note in your investment strategy carries the potential to create melodies of success, and the choice between single-asset and multi-asset funds is one of the most powerful notes you will play in your journey with Crestview Capital Holdings. Navigating the landscape. Examples of single-asset versus multi-asset funds. In the realm of commercial real estate investment, the choice between single-asset and multi-asset funds is akin to selecting the perfect brush for a masterpiece. Let's delve into relevant examples that illustrate the dynamics of both fund structure as single-asset and multi-asset funds and how they can shape the trajectory of Crestview Capital Holdings. 1. Single-asset fund. Focused brilliance. Imagine Crestview Capital Holdings acquires a historic downtown office building known for its prime location. With meticulous renovations and strategic tenant placement, the property's value soars, attracting high-profile corporate tenants. By focusing all efforts on optimizing this single asset, Crestview Capital Holdings aims to achieve significant returns while capitalizing on the property's unique attributes. Benefits. Sense precision strategy. The entire investment strategy revolves around the specific property, allowing for tailored value creation. Sense transparency. Investors have a clear view of how the single asset performs, fostering transparency and accountability. Sense high returns. The property's exceptional performance can result in substantial returns for investors. Considerations. Sense risk concentration. The fund's success is closely tied to the performance of one asset. Any downturn could have a significant impact. Sense diversification. Investors seeking diversification may prefer exposure to multiple properties. 2. Multi-asset fund. Diversified symphony. Now, consider Crestview Capital Holdings creating a multi-asset fund that includes a portfolio of properties ranging from suburban office complexes to retail centers and residential properties. This fund offers investors exposure to a diversified range of properties, mitigating risk through spreading investments across multiple assets. Benefits. Sense risk mitigation. Diversification reduces the impact of poor performance by any individual property. Sense stability. The collective performance of multiple properties smoothens overall fund performance, even if some properties underperform. Sense broader investor appeal. Investors seeking diversification find multi-asset funds more appealing due to the exposure to various property types. Considerations. Sense management complexity. Managing and optimizing a diverse portfolio requires comprehensive oversight and resources. Sense variable performance. The fund's returns are influenced by the performance of all properties, and some may outperform others. Finding harmony in strategy. The choice between single-asset and multi-asset funds resonates with your investment strategy and the aspirations of your investors. A single-asset fund allows Crestview Capital Holdings to maximize the potential of a specific property, while a multi-asset fund offers diversification and risk mitigation. The path you choose will define the rhythm of your CRE fund's journey. Creating a masterpiece. As you embark on this journey, remember that the choices you make will contribute to the canvas of Crestview Capital Holdings. Whether you opt for the focused brilliance of a single-asset fund or the harmonious symphony of a multi-asset fund, each decision plays a pivotal role in shaping the success story that unfolds. Chapter 3. Navigating investment choices. Single-asset versus multi-asset funds. As you delve deeper into the intricate world of commercial real estate funds, the choice between single-asset and multi-asset funds emerges as a pivotal decision in shaping the trajectory of Crestview Capital Holdings. This chapter offers actionable insights to help you make informed choices and orchestrate investment strategies that resonate with your vision. 1. Single-asset funds. Focused excellence. Actionable advice. If your goal is to amplify the potential of specific properties, consider single asset funds. Focus on properties with distinct attributes that align with your expertise. Craft a strategy that revolves around enhancing the value of the single asset through strategic management and improvements. Key consideration: while the potential for higher returns exists, remember that the success of the fund is closely tied to the performance of one asset. Mitigate risk through thorough due diligence and a well-defined value enhancement plan. 2. Multi-asset funds, diversified resilience. Actionable advice: if you aim to provide investors with a diversified portfolio that spreads risk, explore multi-asset funds. Curate a portfolio that includes properties with varying characteristics and potential. Emphasize the benefits of risk mitigation and stability that come from exposure to multiple assets. Key consideration: managing a diverse portfolio demands comprehensive oversight. Develop a robust property management strategy to ensure each asset's performance contributes positively to the overall fund returns. Harmonizing choices: as you embark on this journey, consider aligning your choice of fund structure with your expertise, investors' preferences, and the overarching goals of Crestview Capital Holdings. Tailor your approach to reflect your commitment to delivering value and meeting the aspirations of your investors. Diversity in your arsenal: remember that your ability to offer a variety of fund structures can enhance your appeal to a broader range of investors. Some may be drawn to the focused potential of single asset funds, while others may prefer the stability and diversification of multi-asset funds. Crafting your symphony: ultimately, the choice between single asset and multi-asset funds is a keynote in the symphony you're composing for Crestview Capital Holdings. Allow your investment choices to harmonize with the essence of your vision, demonstrating your strategic acumen and commitment to delivering exceptional results. Exploring the spectrum: public versus private funds and commercial real estate. In the landscape of commercial real estate funds, the choice between public and private funds resembles selecting the right color palette for a masterpiece. This chapter invites you to delve into the realms of public and private funds, each offering a distinct canvas for your investment strategy and shaping the narrative of Crestview Capital Holdings. Public funds: unveiling the public stage. Definition: public funds, often known as real estate investment trusts, REITs, are publicly traded securities that allow investors to buy shares in a pool of commercial properties. These funds are listed on stock exchanges, offering liquidity and accessibility. Benefits: sense liquidity: investors can buy or sell shares on stock exchanges, providing flexibility to exit their investment at any time. Sense diversification: public funds often hold a variety of properties, providing investors with instant portfolio diversification. Sense accessibility: shares can be bought with ease through brokerage accounts, making them accessible to a wide range of investors. Considerations: sense market volatility: public funds are subject to market fluctuations, potentially impacting the value of the investment. Sense lack of control: investors have limited influence over the fund's management decisions. Private funds: crafting behind closed doors. Definition: private funds are not traded on stock exchanges. They pull capital from a select group of investors to invest in commercial properties, offering a more exclusive investment opportunity. Benefits: sense control: investors have a greater say in the fund's strategy and management decisions, allowing for a more tailored investment approach. Sense potential for higher returns: private funds may have the potential to generate higher returns due to their focused investment strategy. Sense slower volatility: private funds are less affected by market volatility since they are not traded on public exchanges. Considerations: sense liquidity: investments in private funds are less liquid, with limited opportunities to exit before the fund's designated term. Sense exclusivity: participation is often limited to accredited or sophisticated investors, potentially reducing the pool of potential investors. Harmonizing strategy: the choice between public and private funds aligns with your investment strategy, risk tolerance, and the preferences of your investors. Public funds offer liquidity and accessibility, while private funds provide greater control and potential for tailored returns. Strategically diversifying: consider diversifying your portfolio by offering both public and private fund options. This allows you to cater to a wider range of investors, each seeking a unique combination of liquidity, control, and potential returns. Crafting your investment canvas: as you stand at this crossroads, envision the masterpiece you aim to create with Crestview Capital Holdings. The choice between public and private funds is a brushstroke that will shape the canvas of your CRE fund's journey, a journey guided by your strategic prowess and dedication to crafting an investment experience that resonates with your vision and the aspirations of your investors. Chapter 4: Unveiling the Landscape. Examples of public versus private funds and commercial real estate. As you delve into the intricate world of commercial real estate funds, the distinction between public and private funds becomes a critical crossroad in shaping the symphony of Crestview Capital Holdings. Let's explore relevant examples that illuminate the dynamics of both fund structure as a public and private funds and how they can define the crescendo of your investment strategy. 1. Public funds. Trading inaccessibility. Imagine Crestview Capital Holdings launching a public fund, also known as a real estate investment trust, right? This fund, listed on stock exchanges, allows investors to buy shares and gain exposure to a diversified portfolio of commercial properties. Investors, seeking easy accessibility and portfolio diversification, appreciate the ease with which they can buy and sell shares through their brokerage accounts. Benefits. iSense liquidity and flexibility. Investors can swiftly enter or exit their investment, aligning with their changing financial needs. iSense diversification. The fund's diverse portfolio shields investors from the impact of individual property performance. iSense wide investor base. The accessibility of public funds attracts a broad spectrum of investors, from individuals to institutions. Considerations. iSense market fluctuations. Publicly traded funds are subject to market volatility, impacting their short-term value. iSense limited influence. Investors have less control over management decisions compared to private funds. 2. Private funds. Crafting exclusive experiences. Now envision Crestview Capital Holdings launching a private fund. This exclusive investment vehicle pools capital from a select group of high net worth individuals and institutions to acquire a specific portfolio of commercial properties. Investors are drawn by the promise of tailored investment strategies and a more hands-on approach to management decisions. Benefits. iSense strategic control. Investors actively participate in the fund's strategy and decisions, aligning with their preferences. iSense potential for specialization. Private funds can focus on specific property types, allowing for specialized expertise and higher potential returns. iSense reduced volatility. Private funds are less exposed to market fluctuations, enhancing stability. Considerations. iSense limited liquidity. Investors typically commit capital for a designated period, with limited opportunities for early exit. iSense exclusive participation. Participation may be restricted to accredited or sophisticated investors, reducing the investor pool. Striking the right chord. The choice between public and private funds is akin to selecting the right melody for your investment symphony. Each choice resonates differently with your investment strategy and the aspirations of your investors. The journey you chart for Crestview Capital Holdings is harmonized by your understanding of these dynamics. Balancing your portfolio. Consider offering a mix of public and private fund options to cater to a broader audience. Diversifying your portfolio of offerings allows you to provide investors with a range of investment experiences, each aligned with their unique preferences and goals. Crafting a harmonious future. As you stand at this crossroads, remember that every choice you make influences the composition of Crestview Capital Holdings' investment landscape. Whether you choose the accessibility of public funds or the exclusivity of private funds, each decision shapes the crescendo of returns and experiences you orchestrate for your investors. Chapter 5. Making informed choices. Actionable insights on public versus private funds. In your journey with Crestview Capital Holdings, the choice between public and private funds serves as a compass, guiding your investment strategy toward the desired destination. This chapter offers actionable insights to help you navigate the intricate terrain of public and private funds and align your decisions with your overarching vision. 1. Public funds. Broad accessibility. Actionable advice. If accessibility and liquidity resonate with your strategy, consider launching a public fund. Craft a diversified portfolio that appeals to a wide range of investors. Emphasize the ease of trading shares on stock exchanges and the benefits of portfolio diversification. Key consideration. Be prepared to address market volatility with clear communication about the fund's performance and the potential impact of market fluctuations. 2. Private funds. Tailored excellence. Actionable advice. If customization and control align with your vision, explore private funds. Identify a niche or strategy that allows you to create a unique value proposition. Highlight the potential for specialized expertise and the hands-on involvement of investors in decision-making. Key consideration. Educate investors about the commitment required for the fund's designated term and the limited liquidity compared to public funds. Striking the right balance. Actionable advice. Consider incorporating both public and private fund options in your portfolio. This approach allows you to cater to a diverse audience with varying risk profiles and preferences. Tailor your offerings to different investor segments, providing a spectrum of investment experiences. Cultivate investor education. Actionable advice. Regardless of the fund type, focus on educating investors about the intricacies of each option. Provide clear explanations of liquidity terms, risk profiles, and potential returns. Empower investors to make informed decisions that align with their financial goals. Crafting transparent communication. Actionable advice. Transparency is key. Clearly communicate the advantages and considerations of both public and private funds. Address potential concerns, such as market volatility for public funds and limited liquidity for private funds. Highlight how each option aligns with specific investor needs. Align with your vision. Actionable advice. The choice between public and private funds should mirror your expertise and the aspirations of Crestview Capital Holdings. Tailor your investment strategy to resonate with your overarching goals. ensuring that your choices enhance the value you deliver to your investors. Diversify to thrive. Actionable advice. Diversification extends beyond just investments. By offering a diversified portfolio of fund options, you create a dynamic ecosystem that attracts a wider investor base. Cater to investors seeking accessibility, customization, stability, or a combination of these qualities. Guiding your journey. As you navigate the crossroads of public and private funds, allow these actionable insights to guide your choices. Remember that the path you choose for Crestview Capital Holdings is a testament to your strategic acumen and commitment to delivering exceptional results. Each decision you make is a brushstroke on the canvas of your CRE fund's journey, painting a masterpiece that resonates with your vision and the aspirations of your investors. Exploring the spectrum. Equity funds versus debt funds and commercial real estate. In the world of commercial real estate funds, the choice between equity funds and debt funds is akin to selecting the right blend of colors for a canvas. This chapter invites you to dive into the realms of equity funds and debt funds, each offering a unique palette for your investment strategy, shaping the narrative of Crestview Capital Holdings. Equity funds, owning the canvas. Definition: equity funds involve pooling investor capital to purchase ownership stakes in commercial properties. Investors become shareholders, sharing in the property's income and potential appreciation. Benefits: sense ownership and potential returns. Investors enjoy a share of rental income and potential property appreciation. Sense portfolio diversification. Equity funds often include a mix of property types, spreading risk. Sense potential for active involvement. Investors may have a say in property management decisions. Considerations: sense risk exposure. The potential for higher returns is accompanied by the risk of property value fluctuations. Sense liquidity. Exiting the investment may take time, as properties are not as easily tradable as stocks. Debt funds. Navigating the notes. Definition: debt funds, also known as mortgage funds, provide loans to commercial real estate projects. Investors act as lenders, earning interest from the loans. Benefits: sense stable income. Investors receive fixed interest payments from the loans, offering a predictable income stream. Sense lower risk. Debt funds are less exposed to property value fluctuations compared to equity funds. Sense diverse exposure. Debt funds may offer exposure to a variety of real estate projects through different loans. Considerations: sense limited upside. Investors benefit from interest payments but do not share in property appreciation. Sense risk of default. There's a risk that borrowers may default on their loans, impacting investor returns. Harmonizing strategy. The choice between equity funds and debt funds harmonizes with your investment strategy, risk appetite, and the preferences of your investors. Equity funds offer ownership and potential for higher returns, while debt funds provide stability through fixed income. Blending the palette. Consider offering a mix of equity and debt fund options to cater to different investor preferences. Diversifying your palette of offerings allows you to accommodate a broader spectrum of investors. Crafting your investment art. As you stand at this crossroads, envision the masterpiece you intend to create with Crestview Capital Holdings. The choice between equity funds and debt funds is a brushstroke that will shape the canvas of your CRE fund's journey, a journey guided by your strategic vision and commitment to crafting an investment experience that resonates with your vision and the aspirations of your investors. Chapter 6: Illuminating Choices, Examples of Equity Funds versus Debt Funds in Commercial Real Estate. As you traverse the landscape of commercial real estate funds, the distinction between equity funds and debt funds emerges as a pivotal junction in shaping the melody of Crestview Capital Holdings. Let's explore pertinent examples that illuminate the dynamics of both fund structure as equity funds and debt funds and how they can define the rhythm of your investment strategy. 1. Equity funds, orchestrating ownership. Imagine Crestview Capital Holdings launching an equity fund dedicated to a mixed-use development project. Investors pool their capital to collectively own a portion of the project. As the project progresses, investors benefit from rental income and the potential appreciation of the property value. This collective ownership provides investors with a diversified portfolio of properties, allowing them to share in the rewards and risks of real estate ownership. Benefits: since collective gains, investors participate in the property's profits and potential appreciation. Since diverse portfolio. The equity fund structure allows investors to own stakes in multiple properties. Since potential decision power. Investors may have a voice in property management and strategy. Considerations: sense risk exposure. The potential for higher returns is coupled with the risk of market fluctuations affecting property values. Sense time commitment. Investors need to be patient, as property appreciation may take time. 2. Debt funds, funding financial notes. Now envision Crestview Capital Holdings launching a debt fund that specializes in providing loans to commercial real estate developers. Investors participate by lending their capital, earning fixed interest payments in return. This approach offers investors a stable income stream while reducing exposure to property value fluctuations. Benefits: sense predictable income. Investors earn fixed interest payments from the loans, offering stable returns. Slower risk exposure. Debt funds are less affected by market fluctuations compared to equity funds. Portfolio diversification. Investors gain exposure to multiple real estate projects through loans. Considerations. Limited upside. Investors benefit primarily from interest payments and do not participate in property appreciation. Default risk. There's a possibility that borrowers may default on loans, impacting investor returns. Harmonizing choices. The choice between equity funds and debt funds is akin to selecting the right notes for a musical composition. Each resonates uniquely with your investment strategy and the aspirations of Crestview Capital Holdings. The path you choose shapes the harmony of returns and experiences for your investors. Balancing the chords. Consider offering a balance of both equity and debt fund options to cater to different investor preferences. Diversifying your offerings allows you to create an investment symphony that appeals to a broader range of investors. Crafting a melodic future. As you stand at this juncture, remember that every choice you make contributes to the composition of Crestview Capital Holdings' investment journey. Whether you opt for the collective ownership of equity funds or the stable notes of debt funds, each decision shapes the rhythm of returns and experiences that you orchestrate for your investors. Chapter 7. Unveiling the concepts, equity funds versus debt funds in commercial real estate. In the realm of commercial real estate funds, the concepts of equity funds and debt funds hold the key to unlocking diverse investment strategies. This chapter aims to provide clear explanations of these fund types as equity funds and debt funds and how they shape the narrative of Crestview Capital Holdings. Equity funds, painting with ownership. Definition. Equity funds involve pooling capital from multiple investors to purchase ownership stakes in commercial properties. Investors become shareholders and participate in the property's rental income and potential appreciation. Explanation. Equity funds enable investors to collectively own a portfolio of properties. As shareholders, investors benefit from rental income generated by the properties as well as any increase in property value. The success of equity funds is closely tied to the performance of the properties in the portfolio. Investors also have the opportunity to influence property management decisions and strategy discussions. Benefits. Ownership stake. Investors hold ownership stakes in the properties, providing potential for appreciation. Shared income. Rental income is distributed among investors in proportion to their ownership. Portfolio diversification. Equity funds often include a mix of property types, spreading risk. Considerations. Risk exposure. Equity funds are subject to property value fluctuations, impacting potential returns. Time commitment. Property appreciation may take time, requiring investors to be patient. Debt funds. Lending a helping hand. Definition. Debt funds, also known as mortgage funds, involve pooling investor capital to provide loans to commercial real estate projects. Investors act as lenders and earn interest from the loans. Explanation. Debt funds operate by lending capital to real estate developers and projects. Investors become lenders and earn fixed interest payments from the loans they provide. These funds often have a diversified portfolio of loans, spreading risk across various real estate projects. Debt funds are less affected by property value fluctuations and offer a stable income stream. Benefits. Fixed income. Investors receive predictable interest payments from the loans they provide. Slower risk exposure. Debt funds are less impacted by property value fluctuations. Diverse exposure. Investors gain exposure to multiple real estate projects through various loans. Considerations. Limited upside. Investors primarily benefit from interest payments and do not share in property appreciation. Default risk. There's a possibility of borrowers defaulting on loans, affecting investor returns. Tailoring your approach. Understanding the nuances of equity funds and debt funds empowers you to tailor your investment strategy to resonate with your expertise and the preferences of Crestview Capital Holdings. Each fund type offers a distinct palette of opportunities and considerations, allowing you to craft an investment experience that aligns with your vision and the aspirations of your investors. Chapter 8. Making informed decisions. Actionable insights on equity funds versus debt funds. In your journey with Crestview Capital Holdings, the choice between equity funds and debt funds plays a pivotal role in shaping your investment landscape. This chapter provides actionable insights to help you navigate the intricacies of equity funds and debt funds, enabling you to align your decisions with your strategic vision. 1. Equity funds, orchestrating ownership. Actionable advice. If you seek to offer investors the potential for property appreciation and shared rental income, consider launching equity funds. Ensure that your portfolio includes a mix of property types to diversify risk. Highlight the opportunity for investors to actively participate in property management decisions. Key consideration. Educate investors about the potential for property value fluctuations and the time horizon required for appreciating returns. 2. Debt funds. Crafting financial notes. Actionable advice. If you aim to provide investors with stable income through fixed interest payments, Explore debt funds. Build a portfolio of loans across diverse real estate projects to spread risk. Emphasize the stability offered by fixed income and the lower risk exposure compared to equity funds. Key consideration: address the risk of borrower default and its potential impact on investor returns. Harmonizing the symphony. Actionable advice: consider incorporating both equity and debt fund options in your portfolio. This strategy caters to investors with varying risk profiles and preferences. Offer a range of investment experiences, from potential appreciation and shared ownership to stable fixed income. Education as empowerment. Actionable advice: ensure that investors understand the nuances of both equity and debt funds. Provide clear explanations of how each fund type operates, the risks involved, and the potential rewards. Empower investors to make informed decisions aligned with their financial goals. Crafting transparent communication. Actionable advice: transparently communicate the advantages and considerations of both equity and debt funds. Address potential concerns, such as property value fluctuations for equity funds and the risk of borrower default for debt funds. Guide investors in selecting the fund type that aligns with their risk tolerance and investment objectives. Strategic allocation. Actionable advice: strategically allocate funds based on your expertise and the market demand. Consider offering a variety of fund options to accommodate different investor preferences. Align your portfolio composition with the goals of Crestview Capital Holdings, guiding your path as you navigate the crossroads of equity funds and debt funds. Allow these actionable insights to guide your choices. Remember that every decision you make shapes the composition of Crestview Capital Holdings' investment journey. Your ability to offer a symphony of investment options will resonate with your investors' preferences and contribute to the crescendo of success you aim to achieve. Chapter 2 Conclusion. Embracing diversity in commercial real estate funds. In the intricate tapestry of commercial real estate, the world of investment funds unveils an array of choices, each offering a unique palette of possibilities. As we conclude our exploration of the various types of commercial real estate funds, let's reflect on the symphony of diversity that lies at the heart of Crestview Capital Holdings' journey. Resonating with strategy, the journey through core plus, value add, and opportunistic funds has illuminated the spectrum of investment strategies at your disposal. Each fund type resonates with a distinct approach, allowing you to craft an investment portfolio that mirrors your expertise and vision. Crafting a melodic ensemble. The distinction between single-asset and multi-asset funds underscores your ability to offer tailored investment experiences. This ability to orchestrate a diverse ensemble of funds empowers you to cater to various investor preferences and risk profiles. Choosing between shades, the exploration of public and private funds shines a light on the dynamics of accessibility and exclusivity. By offering both options, you create a harmonious blend that appeals to a broader range of investors, each seeking a different shade of the investment experience. Harmonizing melodies. Equity funds and debt funds introduce a symphony of ownership and lending. Your choices in this realm allow you to compose an investment strategy that reflects your understanding of risk, reward, and investor appetite. Embracing diversity. As you stand at the crossroads of fund types, remember that the success of Crestview Capital Holdings is rooted in your ability to embrace diversity. Diverse fund offerings provide you with a vibrant canvas to paint investment experiences that resonate with the aspirations and preferences of your investors. Charting the future. The journey through the landscape of commercial real estate funds is an ongoing process. As you progress, consider how the combinations of these fund types can shape the trajectory of Crestview Capital Holdings. The composition of your fund portfolio is a testament to your strategic acumen and your commitment to delivering exceptional value to your investors. Guiding principle: remember that each fund type is a note in the symphony you are creating. By carefully selecting and harmonizing these notes, you'll orchestrate an investment journey that resonates with the dreams and goals of your investors. Through the power of diversity, your journey with Crestview Capital Holdings will continue to evolve, offering a dynamic range of investment opportunities that mirror the ever-changing landscape of commercial real estate. Chapter 2 Key Takeaways. Navigating the landscape of commercial real estate funds. In the realm of commercial real estate funds, understanding the nuances of different fund types is essential for crafting a successful investment strategy. As you embark on your journey with Crestview Capital Holdings, here are key points to remember from our exploration of the various types of commercial real estate funds. 1. Diverse investment strategies. Akin's core plus, value add, and opportunistic funds offer a range of investment strategies with varying risk and return profiles. Choose the fund type that aligns with your expertise, market conditions, and investor preferences. 2. Customized investment experiences. Akin's single-asset and multi-asset funds allow you to tailor investment experiences for different investor segments. Akin's offer diverse options to cater to varying risk appetites, investment horizons, and portfolio objectives. 3. Balancing accessibility and exclusivity. Since public and private funds provide different levels of accessibility and exclusivity for investors, since consider offering a blend of both to attract a wider range of investors while maintaining exclusivity for those seeking it. 4. Harmony of ownership and lending. Since equity funds enable shared ownership of properties, offering potential for appreciation and rental income. Since debt funds involve lending capital to real estate projects, providing stable fixed income. 5. Crafting your fund portfolio. Since select a combination of fund types that align with your vision and market demand. Since balance risk and reward by diversifying your fund offerings to cater to different investor preferences. 6. Investor-centric approach. Since keep investor preferences at the forefront when designing your fund portfolio. Since offer a variety of fund options to accommodate varying risk tolerances and investment objectives. 7. Flexibility and evolution. Since your fund portfolio is not static, it can evolve over time based on market trends and investor feedback. Since stay agile and adaptable, adjusting your fund offerings as the commercial real estate landscape changes. 8. Communicate clearly. Since clearly explain the features, benefits, and considerations of each fund type to investors. Since empower investors to make informed decisions by providing comprehensive information. 9. Strategic allocation. Since allocate resources strategically across different fund types based on market conditions and investor demand. Since ensure that each fund type serves a purpose within your overall investment strategy. 10. Continual learning and adaptation. Stay updated on industry trends, market shifts, and investor preferences. Continuously refine your fund offerings to remain relevant and competitive. 11. Diversity as a strength. Embrace the diversity of fund types as a strength in creating a well-rounded investment experience. The synergy of different fund types can contribute to the success and growth of Crestview Capital Holdings. Remember, your choices in fund types lay the foundation for the investment journey you offer to your investors. By understanding the key points outlined in this chapter, you'll be equipped to craft a fund portfolio that reflects your strategic vision and resonates with the aspirations of your investors. As you progress, keep these insights in mind to navigate the dynamic landscape of commercial real estate funds effectively.